Hi everybody, this is Breeding of Insanity Industries, and today we're going to talk Brexit. And I don't mean a sad case of food poisoning. I'm talking about the Britons finally growing a pair and getting out of the euro. And I'm going to do this from the point of view of looking at currencies and trading and banks, and I really not interested in making an analysis of the reasons why Britain stayed or went. I'm really interested in what happens from the point of view of economically and as part of the banking, because as my students know, I'm quite a historian on banking, which sounds really frickin' dull, but it's only the history of the world. So here we have the first chart, and it's the GU, sorry, not the GU, I can't even read my own chart, it's the Euro Pound, and this of course is Brexit Day. And that looks pretty violent, and let's have a look at that. Well, that's a range of some 700 pips, so it is actually pretty violent. That's Euro Pound. Do I even have that on this chart over here? I do have that on the Euro Pound. It's snuck onto the bottom of the list. As you can see, it's a couple of months worth of price action. We can see that there. A couple of months worth of price action has come through in a day. Right, the football has been kicked and everything's gotten compressed. Now a little quick look at this price action, and the first thing I see is a bit of price reaching down here and price come into this. Right, there's the move up, nice piece of move up, and what we have is price returning to the origin of the move. So we have price reaching back down to the origin of the move here, and that's not unusual. We've seen that quite often. We saw this with the Swiss National Bank getting the hell out of the euro, getting off the peg of the euro, which was a dumb idea of getting on it in the first place. And we saw this with the Bank of Japan announcing unlimited quantitative easing a couple of years ago. We saw price reaching back to the origin of the move, and then price headed off in a direction. Nothing unusual to see here. So let's take a little wider look now. And well, first thing I notice is price is closed inside of this high back here. So let's go take a look and see what we can see. Right, well, good gods, there's the pivot. Look at that. Right, there's a quite a strong piece of floor there, and then price breaks through and keeps going. So that shouldn't surprise us at all. And we see, if you like, the other side of that in there. And the final pivot we see across here. No big deal, pivot. Right, we have occupied this ranging area in here. We've seen price come down, move away, come back to the origin of the move and go. We have not seen anything that should frighten us in any reasonable way. Now, having said that, I most certainly was not anywhere near a market during the Brexit, any time around it. Right, I knew volatility was going to be high, and my style of trading is to trade after the volatility, not during it. So now I'm looking to start making some interesting trades. Well, I think this is a good place to trade back from. Now, the reason why I think that's actually a pretty good place to take a short and come back into this again, and I could be wrong, it's alright, because I know that if I get price close above that line I can trade up, is when we take a big look outwards, we can really see that since here, 2008, gee, guess what, anyone want to wonder what happened in 2008? The euro has been getting progressively weaker. This is why the Swiss had to get out. This is why the Swiss got into the euro peg in the first place. It was an attempt to prop up the euro. And then when they realized that the Swiss economy wasn't up to it and they had to get out, they did. Big kick. Now the pound is divorcing itself from the euro, so I would actually expect the euro to become weaker as a continuation of this. Now we've got this nice little step up pattern here. If we get above there, I'm happy to trade up, but I would really expect to come back down, and I would be looking to trade this back to here if I traded this pair, which I really don't. I've never really looked at it in a serious way. There are more interesting pairs to trade. So, as I said, nothing too interesting. In a more important sense, we need to see what the pound and the euro do or did with the US. And so let's start with the pound. Right, pound daily. Gee, took a big hit. What a surprise. But let's look at what price did again. Right, a little bit of price reaching. And we are back into, right, we can see this happening, which we see, no big deal. Right, price didn't bust out of there, we didn't expect it to, but it wandered back into an area where we expect sellers to be, and it took the week to do it. You know, whenever you know that these big things are coming up, you really do look for the price reaching into an area of supply or demand in order to go away from it. Price came up into there. It only really had one way to go. Now we've got something a little more interesting, which is a close past that extreme. So let's go looking. So we're going to go looking. We might have to look out a bit further. All right. Well, what have we got here? Well, should we be surprised? All-time low of the pound? No, we really shouldn't. We really shouldn't be too surprised. All right, there's the pivot there that we've popped below, staying below. Right, we know how to trade that. That's no big deal. Now, we shouldn't be surprised about this for one really important reason. I mean, this charting software I've got here goes back to 1993. But if we take this back on the long, in a really long time frame, like we go back to the beginning of the 20th century, the pound traded at $4.86. That was back when everybody was on the gold standard. And it's been slipping ever since. So the fact that the pound has gotten weaker just recently as part of a continued long-time trend, because, well, the pound's been, you know, a fiat or partially fiat currency for much longer than the US dollar. We shouldn't expect it. I mean, all fiat currencies tend to zero over time. And essentially we're forced to take US dollars. There's always demand for US dollars at the moment because of our banking system. More on that stuff later. But sitting within an area, it hasn't busted out of anything. It's still in. Look at this, right? So here's our sort of ranging area there, and we've popped out the bottom. We've popped out the bottom of the bottom of that. So maybe what we can do is trade back up into there and continue trading the pound downwards. Okay, well that's certainly something we can look at. You know, wait for the volatility to be over, and then trade the continuation pattern. Now the EU. Now, this is what I thought was kind of the interestingest chart. And the first thing I wanted to point out was here's this reversal pattern off the top. All right, we can see the reversal pattern, and there I've got videos on it. Look them up if you don't know what I'm talking about. And we've come smacking back into the pivot there and taken a dive again. Again, we've come, you know, there's the down move, we've come back up into it. This little hook in here. My good friend Captain Pugwash will tell you how important they are. I'm sure he saw that coming nicely. And again, we've got this, well, it's really failed to close below that, but more importantly, it's failed to close below this. So we're still sitting in this little zone here. We haven't really gone anywhere, right? But here's the big key, right? We go back here. What we have is relatively, go back down to the daily chart, relatively, the pound is weaker against the euro, or weaker against the US dollar, but the euro is also weaker against the US dollar. So it's looking like what people are thinking in general is that the BrExit weakens both the euro and the pound. It certainly weakens the euro, because by gods it needs the pound tied to it, because seriously, it's not what I would have considered a long-term stable currency if I knew anything like what I knew now when they came in. And just out of interest, this is the Euro-US weekly chart. And I want this one. There's sort of 2009, sorry, 1999, 2000. Remember, this is where the euro was floated to the public, right? And lots of countries took it on as their own. But look how far back it goes trading. It's an interbank currency back here. Long time. And this goes back to 1987. I've actually got a chart of this that goes, oh wait, no, I got it wrong. There we go, back to 1971. Now, 1971 is a really interesting date in the history of banking, but that's very much for another story. The main point of this video is to show that nothing's really happened. We got some immediate volatility, which means we really got several months worth of price action jammed into a day. It'll calm down a bit and go from there. Now, on a sort of more speculative note, if you like, there was a lot of noise coming up to the Brexit vote about how bad this was going to be for the British economy. And a good deal of that was just fear-mongering. But a Brexit is not what the bankers want. And the bankers will try to ruin the British economy. And I'm not saying that with a tinfoil hat on, I'm saying that with an eye to history. When bankers don't get what they want, they create unfavourable economic conditions. So, Brits, strap in. You're going to have to do more. You've taken the first step in removing the euro. But just remember that your own banking establishment was handing out, some very fear-mongery statements. You go searching for those yourself. I'll probably cut this out anyway. Well, everybody, this has been Breeden of Insanity Industries, helping you make more money by sucking less.